For decades, Japan has been this economic puzzle, right? A global powerhouse just completely stuck in a rut for 30 years with falling prices and stagnant growth. So, two different leaders, Shinzo Abe and Fumio Kishida, came along with two radically different plans to fix it. One was all about shock therapy. The other, more like a protective shield. We're going to break down these clashing visions and figure out what they mean, not just for Japan, but for the rest of us too.
So yeah, that's really the big question, isn't it? This is the multi-trillion-dollar problem that has haunted modern Japan. And look, this isn't just about numbers on some boring spreadsheet. It's about national confidence, the well-being of millions of people, and trying to find a way forward after the so-called lost decades. So, what were the two big ideas on the table?
Okay, so on one side, you've got Abenomics. This was a massive, high-stakes gamble to literally shock the system out of its deflationary mindset. It was aggressive, it was ambitious, and it grabbed headlines all over the world. And then on the other side, you have Kishida's New Capitalism, which was, well, the complete opposite. It was a super cautious approach, designed not to jolt the system, but to shield it from all the chaos in the world, like the pandemic and supply chain nightmares. Two totally different philosophies for the exact same problem.
All right, to really get what they were trying to do, we have to dig a little deeper. We need to get into the core philosophy behind each plan. And really, it boils down to a clash between, well, imagination and reaction.
And here's the fundamental split, right? Abenomics, it was this act of what our sources call macroeconomic imagination. See, Abe's team thought the problem wasn't the economy's hardware, but its software. It was a psychology problem, a crisis of confidence. Their whole bet was, hey, if we can just change how everyone thinks about the future, we can jolt the whole system back to life. Kishida's plan? Totally different vibe. It wasn't about dreaming big, it was about damage control in a world that suddenly seemed a whole lot riskier.
So, a big question. How do you actually change an entire nation's mindset? Well, Abe had an answer, and it was the most famous and yet controversial part of his whole plan. He brought out what everyone started calling the monetary bazooka.
And this right here, this was ground zero. The Bank of Japan. This place, normally known for being super cautious, was basically told to throw out the old playbook and go big. We're talking one of the most radical monetary experiments we've seen in modern times.
So they unleashed this thing called unconventional monetary policy. You hear these fancy terms thrown around, like quantitative easing or QQE and yield curve control. But here's the simple version. The central bank just started buying up a ton of stuff, mostly government bonds, to flood the system with cash. The goal? Make it super cheap to borrow money and send a giant flashing signal to everyone that the days of falling prices were over. For good.
And to give you a sense of just how massive this was, check this out. The Bank of Japan's balance sheet, basically all the assets it owns, it just exploded. I mean, it went from being worth around 30% of Japan's entire economy to over 100%. Think about that. The central bank owned assets worth more than the country's entire yearly economic output. This wasn't turning on a tap. This was like diverting an ocean.
Okay, but what happens when you've been firing a bazooka for a decade? Eventually, someone has to clean up. And that job fell to Kishida's new Bank of Japan governor, Kazuo Ueda. His mission was this incredibly delicate balancing act called monetary normalization. Basically, he had to figure out how to put that bazooka away without it blowing up in his face, which included raising interest rates for the first time in 17 years.
All right, so we've had the shock therapy, we've had the cautious cleanup, but did any of it actually work? What were the results on the ground? And this is where things get really interesting, because we run right into this central paradox. Japan had a recovery that most people couldn't even feel. So let's look at the scorecard. And honestly, it's kind of complicated. Under Abe, yeah, the economy grew, unemployment fell to record lows. That's great. But inflation, the main target, it just wouldn't budge. Then Kishida comes in and boom, inflation finally shows up, though a lot of it was imported from the rest of the world. Paychecks started looking bigger, but overall growth slowed down. So on paper, it's a mixed bag. But the real story, the one that matters to people, isn't in these top-line numbers.
No, the real story is right here. This quote just nails it. This was a recovery for big companies, not for the average worker. You had corporate profits in the stock market hitting all-time highs, but that money just never made it into people's pockets.
And why not?
Well, because companies, after decades of things being so uncertain, just sat on the cash. They hoarded it instead of giving raises.
And this chart right here, man, it shows you the painful results of that. Look, your nominal wage, that's the actual number on your paycheck. It went up, that's true. But your real wage, which you can actually buy with that money, it went down because of inflation. So you're getting a raise, but you feel poorer. It's the perfect definition of what our sources call a prosperity without feel.
So that's the big why, right? Why didn't all that corporate cash turn into higher wages? Well, that brings us to the missing piece of the whole puzzle, the famous third arrow of Abenomics. You had the monetary bazooka, you had government spending, but the third part was supposed to be the hardest and the most important: deep, fundamental reform of the economy itself.
And listen, the to-do list for this third era was huge. We're talking about tackling some of Japan's oldest, toughest problems. Things like making the labor market more flexible, shaking up corporate culture, modernizing farming, and a big push for getting more women into the workforce. And to be fair, some of it worked. Tourism boomed, female labor participation went up, but the really deep, politically painful stuff, it pretty much stalled out.
And there's this fantastic summary from our source material that just perfectly captures why both leaders fell short. Abenomics was breadth without depth. Abe tried to do a million little things, but he never really had the political muscle to take on the powerful groups that stood in the way of real change. And Kishida, his approach was caution without consequence. He was so careful not to rock the boat that he ended up not really changing anything important.
So we step back and look at this whole 10-year experiment. What's the big takeaway here? Well, Japan's story is a massive lesson and maybe a bit of a warning for every other major economy out there that's dealing with its own problems.
So what did we learn from all this? The lessons are crystal clear. First, a monetary bazooka is not a magic bullet. It can't fix an economy by itself. You also need smart government spending to go along with it. But, and this is key, that spending can't just be about short-term fixes. It needs a real, coherent, long-term plan. And at the end of the day, none of that works if you don't do the really hard, politically brutal work of structural reform. But maybe, just maybe, the biggest lesson is this: changing policies is one thing. Changing a national mindset, a 30-year-old habit of just expecting things to stay flat, that is an incredibly difficult thing to do.
And that leaves us with one final, massive question. As the whole world is now dealing with its own post-pandemic weirdness, rising rates, inflation that won't go away, slow in growth, is Japan's journey a blueprint to follow, or is it a giant warning sign, a story about the real limits of what economic policy can actually achieve? And that, right there, is the question that leaders all over the globe are wrestling with right now.